Good morning and welcome everyone to AmeriCollect's webinar today titled 501R4, the IRS is auditing your financial assistance policy. My name is Joe Moretti and I'm part of the business development team here at the ridiculously nice collection agency AmeriCollect. I do want to note that I apologize for the delayed start. We were having a little bit of technical difficulties, but nonetheless, I am happy to be your moderator for today's session. I do have the pleasure of introducing Sean Gretz, but before I do, I'd like to show you how to ask questions during the session. On the right-hand side of your screen, there is an area that you can type out a question if you should have any during this webinar. I will interject these questions to Sean during the session if there is time. Sean Gretz is the president at AmeriCollect and has hosted multiple webinars, visited facilities, and has spoken nationally on the topic of 501R. So sit back, everyone, and enjoy the webinar as I welcome Sean.
Thanks so much, Joe. I truly appreciate the introduction, and welcome everyone to AmeriCollect's annual. It seems to be annual now because I've been doing this going on about 4 years now of 501R. A little bit of background, a little bit of information about it. So welcome, sit back. I hope you enjoy the conversations. And one thing I want to clarify, if you ever have any questions on 501R, I'm here for you. So give me a call, send me an email, and my information will be on the last slide. And I can help you walk you through some of the questions that go on. And a lot of my presentation is going to be what I call the meat and potato side of things, where I'm going to give you a lot of information. And it's going to be coming at you fast. So the slides, as Joe said, the slides are on the handouts on the right-hand side. If you need them, go grab them on the GoToMeeting, print them out, and be ready to document. If you want some information afterwards as well, like I said, contact me. So let's begin. Who we are. I have to say this. As the president of AmeriCollect, I'm required to tell you that 30 seconds, we are the ridiculously nice collection and early out company. We love to treat patients the way they should be treated and the way your mission, vision, and values at your organizations are calling for them to be treated. And that's what we do. We do collections and early out in that mindset of saying, just because a person owes money does not mean you should treat them any different. They should be treated ridiculously nice all the time. And I have to tell you, I'm not a lawyer. Do not say it, Holly, and I got to give you disclosures and go on and say, please contact your attorney if you need be. So let's talk about the agenda today. I'm going to give you a little bit of background on 501R. We're going to talk a little bit of what the Schedule H is as well, and why you should know where to find your Schedule H. We're going to talk about what a 3-year audit by the IRS means. We're going to talk about who must comply with 501R, and then finally the big meat and potatoes, diving into 501R 4 and 5 to make sure that you have your policies are there and in compliance with the IRS. Then finally, if you have any questions and answers afterwards, please send them over, as Joe said, in the chat function on the side, and I'll see if I can answer those afterwards. They're a little bit difficult. I may have to say, hey, let me get back to you on that, or I may have to say, hey, let me reach out to my network of clients and peers and discuss how they are approaching 501R. So let's dive in. This isn't changed since many of my other presentations, but for those that are new and need the background, here's how it goes. So back in 2005, really, Senator Grassley really started diving into and saying, hey, what benefit is my local hospital providing my community to be not-for-profit? Why are they getting tax-exempt status? Why are they not paying property taxes? Why do they have a foundation? Are they truly providing the benefit that we're giving that tax-exempt status for? So as he dove in, there was something in 2008 that came from that, where the IRS released what's called the Schedule H on the 990. And that Schedule H asks a bunch of questions. I'm going to dive into more what that is later on, but that's where it started in 2008. But in 2010, and part of the Affordable Care Act, the IRS was tasked with creating what's called 501R, or the requirements to show that a hospital is providing enough community benefit. That was in 2010. And in 2016, the IRS then released the final version of 501R. The interesting thing, though, was in 2015, the IRS said, I know we released the final version in 2016, but the 2015 version you should have been working on in good faith interpretations, even though several things have changed. So what is 501R? There's really three things in 501R that you need to understand. It's 501R3, which is the Community Health Needs Assessment. And that we're really not going to be covering here is 501R3, but what we are going to be covering is 501R4, 5, and 6. What 501R4 is, it's your financial assistance policy. And you couldn't be healthcare if you did not have an acronym to go along with it. So what I'm going to say is if you see FAP, make sure you understand that's financial assistance policy. 501R5 is the next one. That's the amounts generally billed, or again, another acronym, throw at it, AGB. And then 501R6. 501R6 really dives into the extraordinary collection actions, or ECAs. Now, 501R6, I am not covering in this presentation. We have another webinar coming up that you'll want to attend if you want to learn more about billing and collection policies and practices and the extraordinary collection actions. So really, I'm going to touch on 4 and 5 in this presentation. So a little background about the timeline, what happened. Well, in a sense, what the IRS said is there should be a point for a patient has the capability to qualify for financial assistance, a time frame, a timeline. And what that is from the date of discharge, from the date of the first post-discharge bill to a finite time where a patient has the ability to apply for financial assistance. And what the IRS basically clarified and said, it's 240 days. 240 days from the first post-discharge bill. That's a long time when you really think about it, right? 240 days. A lot of things can change in a person's life in 240 days. A person can go from being gainfully employed to being unemployed in 240 days. A person can go from having no children to having their firstborn child in 240 days. Think about that as you go through your financial assistance policy. A patient has 240 days from that first post-discharge bill in order to qualify for financial assistance. We talked a little bit about that Schedule 8 and why it's so important. So let's dive in. In 2010, the IRS released what's this version called the Schedule H. And there's been some updates, and I'm going to actually dive into the Schedule H itself so you can take a look at what the questions are all on this. And someone in your organization is filling out the Schedule H. It's probably not you, but understand how it applies to you is extremely important. And you want to start looking at the Schedule H and what is being completed each year for your team. If you're a Vice President of Revenue Cycle, I surely hope that you are part of the conversation when you're filling this out. It's asking questions such as, is there a financial, does it have a financial assistance policy or written policy in regards to this? It's a yes or no question. Did you have the financial assistance policy during the tax year? Another yes or no question, and was it written, right? Now, these are easy things, and we're going to talk about being audited by the IRS. These are easy things. If someone accidentally clicks no here, you're going to be audited. If someone puts no on some of these other ones, you're going to be audited. It asks the question of, what are you using to make the determination if an individual is eligible for financial assistance, right? So here's a quick conversation of saying, are you using federal poverty guidelines to make that determination for free care? And what percentage is it for free care? Did the organization use federal poverty guidelines to determine eligibility for providing discounted care, right? Most organizations have a sliding scale in 3B. Are they checking 400%, 350%? What are they checking for those things? And then ask all kinds of different questions to make sure that you, the organization, is received, or the community benefit is there for the entire organization so that your community is receiving that community benefit. And I'm not going to go through all this, but there's a lot of information in here of what you're using for your actual number of programs and activities and percentages of benefits. It also talks about, what about some physical improvements in housing, community support, those types of things along with it. It adds into your bad debt expenses. Are you looking at bad debt expenses and what those are? It talks about what your collection practices are. Yes, this is going to be covered a lot more in our next webinar. Do you have a written policy for your debt collection practices? And finally, it talks about name all the hospital facilities that go along with this. Sorry, I scrolled down too fast. And then it talks about the community health needs assessment that goes along. And a lot more questions in regards to your financial assistance policy and your extraordinary collection actions. If you have not looked at this recently, I would highly suggest you looking at this and diving in to understand what your hospital facility is putting on your Schedule H. And why does that matter to you? Well, it comes down to this. The IRS is auditing those 990 Schedule H's. They're ensuring what they're putting on paper, or whoever in your organization is putting on paper, is what you are doing for a community benefit. And they're being audited. You're being audited once every 3 years. That means if you haven't been audited in 2017, 2016, or going back to 2017, 2016, or 2018, your year is this year. You're going to be audited at some point, and you want to make sure that you want to limit the amount of time that the IRS has to audit you if they are going to do it. So what I've heard from a majority of sources is saying the IRS is first looking at it from afar. They're reviewing that 990. They're reviewing your website to go along with it to ensure that you have the documents out there. If you pass that 990 test and say you have all the policies in place, and you pass your website is up to date with all the information on your financial assistance, you're most likely not going to be audited in person. What has happened though, there has been audits in person. In 2017, I'm going to talk about what happened. There was 166 referral exams, meaning they actually came on site and did an audit. 33 of those represented a $50,000 fine because they were not following 501R. And one hospital lost their tax-exempt status in 2017. Just an update on that, in 2018, another hospital lost their tax-exempt status as well. So let's talk about what they're auditing for if they do come on site. And these are all the questions down below that they will be asking you to complete before they come on site. So they're going to be asking you for evidence that the policies have been adopted by board minutes or resolutions. They're going to be looking for the exact web pages for all the documentation that you have. They're going to be asking for the policies themselves. They're going to be asking for your AGB location on the financial assistance policy and the calculations used to do it. They're going to be asking for gross and ABG charges for all emergency and medically necessary. They're going to audit that as well. They're going to be auditing how the financial assistance information was widely publicized. Do you have it documented, how you're going to widely publicize it? Most do in their policies. They're going to be asking for a copy of billing statements. They want to see that you have that conspicuous written notice on there. They're going to be asking for your translated documents as well, not just the ones that you in English, but also the translated. We'll talk about that more later on. They will ask about your on-site signage. And they're probably going to take a tour to say, do you have it? Are you widely publicized in a sense? And do you have it so that anybody that comes into your hospital facility understands that you have financial assistance? They're going to look at those list of extraordinary collection actions. They're going to ask for 3 examples where extraordinary collection actions were performed and within what timeline. They're going to ask for a final notice to see that you have those extraordinary collection actions listed out. They're going to ask for the examples of the extraordinary collection actions, legal and judicial actions, if you have taken any. They're going to ask for the copy of your contract with your collection agency that should address this. They're going to get the interview names of the people they're going to be meeting with. They're going to go through and ask for any complaints from the patients in regards to 501R. This was never communicated to you, just an FYI. They never at any given point did they communicate that you need to document the complaints with patients on 501R, but they're going to ask you for it. And finally, they're going to ask you for that list of providers that is required to be on the FAP. This alone, going through this audit alone, will take a lot of your time. It's going to be a lot of work. So my suggestion to you is you should relook at your 501R policies, procedures, and ensure that they are being done correctly. I'd rather be proactive instead of having the IRS come on site and look at your organization. Regarded entities, website. They now have posted, and I think it was in November, they posted a document saying, hey, governmental hospitals, you have to comply with this if you're dual status. I want to be clear on this. If you're a governmental hospital, even if your lawyers are saying you don't have to comply, send this document to those lawyers and to your CFO. It's important for them to understand that the IRS is calling you out on this. You want to make sure that either one, you figure out if you do want that dual status, or number two, you need to comply with this regulation. So let's dive into the meat and potatoes, as I talked about before, and go into what 51R4 is all about, the financial systems policy. So first thing you got to know is this. What the financial systems policy should be covering is all emergency and other medically necessary care provided by the hospital facility. That's it. That's what it needs to cover. Every emergency and medically necessary care. And the interesting thing is that the IRS did point to two different places to say, hey, use either the Medicaid definition for what medically necessary care is, or use the Social Security Act to define which one is medically necessary care. Those are two ways to go about it. And down below is a great resource that the IRS finally published, and I think this was published last summer, with a lot of information about 501R. And it kind of it's really a two-page printout, and it's similar to what my presentation is, but it does a good job of calling out everything you need to do to ensure you are 501R compliant. One of the most common questions I get, and I receive it probably at least once a month, is the question of, well, what about my pharmacy, or its nursing home, or optometrist, or plastic surgery? The answer is this. What the IRS said in the final regulation is all these four that are on the screen and the many, many other ones, there's a way to say what is not covered. So we're going to dive into that now. You have to state if something is not covered by your financial assistance policy. So if you don't state it, in that sense, they are covered by your financial assistance policy. Is if you specifically call them out. So if you put on your financial assistance policy the pharmacy is not covered, great. Then it doesn't have to be covered by your financial assistance policy. Everything else has to be covered by your financial assistance policy. I'm going to give you an example, because one of the things I'd like to do is provide you examples of what other policies that I've read over, and I review quite a few policies, what they have used in order to exclude things. So one of the things that, here's an example of one where it says, number one, elective procedures, right? So elective procedures are not covered. Number two, it talks about care provided by physicians that are not employed are not covered. And number three, in this one, they talk about deductibles and coinsurance for out-of-network is not covered. Now, if you want to say nursing home, you own a nursing home and it reports up through your financial, or through your reports up financially through your hospital organization. You can put that in pharmacy, optometrist, whatever it is you do not want covered by financial assistance, make sure it's in your financial assistance policy. So the next thing they ask you the question of this. for a financial assistance policy, you need to establish the eligibility criteria. So what is a person eligible for, and when are they eligible for financial assistance? And when the time frame does an individual qualify for financial assistance? In this situation, where if you're silent on the matter of the date of qualification, is it the date of service? Is the application date? So let me ask you this, right? I talked about being 240 days. It's a very, very long time. The date of service, let's say it was 6 months ago from today, call it August. August, the person was the date of service for the patient. On that day, the person was gainfully employed. Today, the application date, that individual is no longer employed. Are you qualifying an individual based on the date of service or application date? You need to establish that eligibility criteria. Here's a suggestion of mine, and I'm going to talk about this. A lot of the items in red, black on this document are bolded and underlined. A determination of financial assistance will be effective for a period up to 6 months, including subsequent emergent or medically necessary care. So what I'm doing in this policy, or suggestion that I think I've received from another organization, is that they're looking at this and saying that from the date of applicant for 6 months, that individual will qualify for financial assistance. I do not need another financial assistance application every single time that patient comes in. If it's emergent or medically necessary, it'll automatically qualify for a period of 6 months, including, here's the part that I'm going to talk about this a little bit more later on, including all outstanding receivables in bad debt agencies unless a payment has been applied for the account. We're going to talk about what that means, unless a payment has been applied for account later on. It is the patient responsibility to inform XYZ of change in financial situation or addition of third-party payer information. This is my suggestion. It's a great way to establish the criteria for an individual to be eligible for financial assistance. You know, many organizations will have on there, along with that eligibility criteria, is this. They will have on there what they're asking for really in the Schedule 990 questions A, B, and C. Are you using the federal poverty guidelines to make that qualification? Most organizations, the answer is yes. And if that's the case, you need to ensure that it's in your financial assistance policy as well. Make sure it's documented that federal poverty guidelines are in there. So let's talk about one of the common questions I receive as well, is in regards to refunds. It happens all the time. Refunds are going to be a common occurrence or more frequent occurrence with 501R. How the refund is written is this. You're required to refund a patient that qualifies for financial assistance if it's greater than $5. Let that sink in a little bit, right? If a patient qualifies for financial assistance and has paid more than $5, you are required to refund them. Let's talk about certain situations, right? So let's say it's a sliding scale and the patient qualifies for financial assistance, and the patient still owes, make a round number, $100. Now, you do not have to refund that money because you can apply it to the amount the patient owes. Where this really comes into case is when a patient qualifies for full financial assistance, 100% free care. You have to refund any payments that have been posted onto that account. Another way that I've seen many organizations go about this is they create a separate write-off code that does not classify the account as financial assistance, but still forgives the balances. But you cannot claim that on your 990. And that's where the bottom sentence comes in. Including all outstanding receivables, including those at the bad debt agencies, unless a payment has been applied on the account. Unless a payment has been applied on the account. No longer does that qualify for financial assistance, but in my suggestion, you create a separate write-off code, because that patient, if they do not have the means to pay today, they will not have the means to pay the collection agency as well. And you're creating a financial hardship for that patient. Make it easy for them. Let them erase the amounts that they have owed, Do not refund them, because this allows you not to refund them and you create a separate write-off code. One of the other requirements for 501R4 is that you have documents listed on your financial assistance policy. This is one of the most common occurrences that I see when I review financial assistance policies. They're not asking for the documents. If you do not ask for the documents you need to be able to make the determination, you cannot deny financial assistance based upon the lack of documentation. So let's say you forget to put the W-2, that you want the W-2 on your financial assistance policy, but the financial assistance application itself says that you need the W-2. If that patient does not provide you that W-2, you cannot deny them for financial assistance. Simple concept here. It has to be on the policy and it has to be on the application itself. If it's not on the policy, you cannot deny for it not being, and it's on the application, you cannot deny for it. One huge question you have to ask yourself is this. Let's talk about assets. Medicare bad debt requires assets in order for an individual to be qualified for financial assistance and Medicare bad debt. What does that mean? So is your financial assistance policy asking for assets to make that determination so you can claim them on Medicare bad debt? Now, this comes up with a common occurrences when you get audited. Did you request assets as part of your financial assistance application? And they will want to see the documented assets that you did request. So remember this. Make sure you ask for assets. Another thing that I'm commonly seeing now is the question of what about presumptive determinations for financial assistance? The great thing that the IRS did in this final regulation is they put in a document or wording that says hospitals are not prohibited from using third-party information services to make a presumptive eligibility determination for who can qualify for financial assistance. So what I like to say is use all the third-party information sources you can get your hands on in order to qualify for people for presumptive eligibility for financial assistance. Here's a great example of an organization that did a very thorough job of putting everything they can think of in order to qualify for a patient for financial assistance. They have the capability to use public record and information sources in order to qualify. In this case, they're using Paro, a great company that does scoring. They're using credit bureaus. A lot of your collection agencies are using credit bureaus to score to make a determination how collectible the account is. In this instance, they're using that credit bureau score to determine the individual was eligible for financial assistance. They're using homeless. Is the person homeless? They're automatically presumptively qualifying for financial assistance. Most likely you're not going to get paid anyhow from homeless. Deceased with no assets. So if there's a probate with no assets, they're qualifying that individual for financial assistance. If there's a bankruptcy, so let's say a person applies for bankruptcy, they're qualifying. Is the patient receiving food stamps or some other nature? They qualify them automatically. There's many, many other third-party information sources where you can qualify a patient for financial assistance without receiving the document. And that's very important because it happens all the time. And it's one of the most common complaints that I hear. I cannot get the patient to fill out the documents in order for us to qualify for financial assistance. Great. You cannot get the patients. Look for third-party information to qualify them. Another requirement to have in your financial assistance policy, you need to have the statement in red. Those approved for financial assistance may not be charged more than the amounts generally billed for emergency or other medically necessary care. That statement, that single statement, has to be in your financial assistance policy. Ensure that it is. The final regulations also require that all physicians who perform emergency or medically necessary care at the hospital have to be documented as part of the financial assistance policy. And you need to document those that are covered by the hospital financial assistance policies and those are not. Down below is a way to look at this, right? Who follows the financial assistance policy and who does not follow? You need to have a list, both sides. left and right to say who follows the financial assistance and who does not follow. And the IRS updated this a little bit after the final regulation came out. In the summer after the regulation, they clarified and said, you know, we don't want every provider's name. That would be too extensive of a list, right? So if it was Dr. AYZ and Dr. XYZ, and they don't want the names. What they would prefer to have is the provider clinic name or the provider physician group that goes along with it. That's what you need to have. They also clarified to say, you know what, we really don't want this as part of the policy, but we really want it as an appendix to the policy. So please use the appendixes as you need to in order to make sure that you are not required to be readopted by the authorizing board all the time. So that's number two. Number three is that you will have to update that physician list at least quarterly, or taking reasonable steps to ensure the accuracy of the list. So if you don't have someone tasked or assigned to ensure that all providers that perform medically necessary or emergency care are on this list, you need to take care of that. You know, just talking about the appendix, I want to make sure that you understand how important the appendix is to a financial assistance policy. There's a lot of documentation that gets updated regularly, and you really should be looking at what the appendix can do for you, right? So number one is your AGB. Is that a part of the appendix, or is that a part of the document, the financial assistance policy as well? Number two, let's talk about the physician list. That is going to be updated quarterly. Make sure that's the appendix. Number three, federal poverty guidelines. Again, another thing that's a great thing to point to appendix, so that when that updates the federal poverty guidelines, because they update every single year, that you're not having to take it back to the board every single year. So those are things that I would just suggest you make sure that you have an appendix as part of your financial assistance policy. It's a lot easier updating little things like this as part of the appendix instead of the entire financial assistance policy and bringing it back to the board. You know, one of the things I keep on seeing in many organizations, financial assistance policy, is a way to qualify individuals for catastrophic care. You know, insurance deductibles are ever increasing, it seems, and many individuals are coming out of the to a point where they really have financial hardship where they cannot even pay for their deductibles. Individuals, and where I see it the most is individuals at 25 years old when they roll off their parents' insurance, and they get their first deductible, not understanding that, you know, $5,000 needs to come out of their pocket first. Well, that's where catastrophic care comes in. It allows the capability to qualify individuals for financial assistance using a catastrophic care. So the way many of these work is, it's the bottom sentence here. If the bill exceeds 25% of the family income and you have assets less than 600% of federal poverty guidelines, you can qualify that bill for financial assistance. It's a way to work with people with unaffordable health insurance. One of the other requirements of the final regulation talks about creating what's called a plain language summary. So what is a plain language summary? Well, it's think of a financial assistance policy simplification document. It needs to take the most important things to a patient and put it and dumb it down to make it easy for the patient to understand the financial assistance policy. It needs to have a location where the direct website address, where the individual can obtain copies of the financial assistance policy, the application, the forms, the billing collection policies, all those documents. So it has to have the direct website address. Number two, it needs to understand, or it needs to document where the physical location where an individual can receive assistance. So most organizations have financial counselors someplace on site. Document that location for a patient in order for them to understand where they can get help. Number three, it needs to talk about how to apply for financial assistance. Other things is that you might want to have on there is that federal poverty guidelines and what it means to a patient in order to qualify. What percent receives free care based upon that as well. And you may even want to have on there the statement of a patient responsibility in order to pay the accounts. So one of the big things with 501R was the requirement to have your financial assistance policy widely publicized. And we're going to talk about what it means to be widely publicized now. There's really 5 requirements to be widely publicized. Number 1 is you have to have paper copies available at public locations. And the IRS defined what public location is later on, but this is where they said, all emergency and admission areas need to have paper copies of your financial assistance policy. 3 and 4 are really big, and I still see many, many hospitals that are not doing this correctly. Work with your registration and admission folks in order for them to do that. You need to offer your financial assistance policy as part of the intake for outpatient or part of the discharge for inpatient process. Talk to those registration and admissions folks. Make sure that they're at least saying, would you like more information about our financial assistance policy? It's a simple statement that you can throw out there at any given time during the registration in order to offer financial assistance information. When we talk about what paper copies need to be available, diving into this a little more, you really need to have your financial assistance application, the financial assistance policy, the plain language summary, and the billing collection policies. And oh, by the way, as I talked about a little bit before, you need to have all 4 of those documents translated. At the threshold of 5% of the individual that speaks a different language of 5% of the population or 1,000 individuals, whichever is less. So if you live in a community of 10,000 and you have 1,000 people speaking Spanish, you need to make sure that document is translated into Spanish. Widely publicize the 4 other requirements. Number 1, you have to make sure it's widely publicized as it's available on your website. Number 3, you need to make sure that that you have a conspicuous written notice on every statement that the hospital, and this is just completely clear on this, it's only the hospital organization sends out that you have to have that written notice on. Number 4, you need to have conspicuous public displays, signs that attract the visitors of noticeable size and in minimum of public locations. And again, public locations were defined as emergency and admissions areas. So you need to have some sort of sign saying financial assistance available to those who need. And number 5, you need to notify and inform the community. This was a little bit of an update on this. Number 5, when they originally posted it out there wasn't really clarifying information what that means to update and inform the community. They now have updated saying that it's notifying and informing members of the community served by the hospital facility about the financial assistance policy in a manner reasonably calculated to reach those members of the community. What I've seen, and I've heard many organizations have done, is they take it to individual places such as homeless shelters, libraries, places where they're offering food meals to those that are struggling. Those are great places to put the documentation. By the way, you might want to publicize it in the newspaper at some point, or do a Facebook post in regards to it. Some way to reach the individuals that are in need. That's what it means to be widely publicized. All right. That's all on 501R4. So now let's touch on 501R5. It's going to be very simple what 501R5 is. And for the most part, this is where the accountants take over and the controllers take over of your hospitals or CFOs and make this calculation yearly. So there's 2 different ways to do this. There's the way of one being look back. What look back does, it takes all Medicare alone or Medicare with all commercial payers, and to be honest with you, I don't know who would do a Medicare alone. It's mostly Medicare with all commercial payers. And yearly take a look at what you're normally receiving for Medicare and all commercial payers. And you got to update it that within 60 days of your fiscal year. So you want to look back and say, okay, what did Medicare and all commercial payers pay me? Great, now I got a discount. Now I need to discount the bill before I send it, I need to discount the bill of only those that qualify for financial assistance. I need to only update those and provide them a discount, then apply the financial assistance amount. Number two, there's another way to go about it, and I don't know many organizations are doing it. It's looking at the perspective of saying, okay, what is Medicare paying today? Great, Medicare's paying this. I'm going to use that in order to give them a discount on what is being qualified for financial assistance. You know, one of the things I constantly see is this, or one of the things that I have seen done in regards to this is Spectrum in Michigan. Spectrum, one of the things that they got away with is they said no more sliding scale. It doesn't make sense for us as an organization. So anybody that qualifies for financial assistance will now qualify only for a 100% discount. And did a couple things for them. Number one, let's talk about refunds. I talked about that being a pain of 501R. Well, refunds went away. In a sense of refunds didn't go away, but refunds from the sense of understanding everybody gets the refund. You don't have to worry that they qualify for partial care, they qualify for full care, right? So refunds, in a sense, they automatically refund. There's no sliding scale to say, oh, this one, let's apply it to the amount they still owe, and this one, apply it to all of them. That's number one thing. Number two, your AGB. You do not have to do anything with your AGB. Everyone qualifies for 100% care. AGB only matters to those patients who qualify less than free care. So it's an interesting thing. I'm still looking for an individual from Spectrum to have a conversation with. If anybody knows anyone, send me some information on them. But that's all I have for you for 501R4 and 5 today. Here's my email, my direct line. Give me a call to talk about it. And Joe, are there any questions that came in?
Yes, we do have one. The question is, if we use the presumptive adjustment for deceased patients under a certain balance, how does that affect our Medicare cost reporting?
So that's a great question, right? So it comes down to a deceased patient, and you're qualifying for financial assistance. In a sense, my opinion is you're better off actually not using financial assistance in that instance, and somehow not using financial assistance in that instance, and really using Medicare bad debt to put that on the cost report. You're going to get 56 cents on the dollar versus the presumptive eligibility. So one way that you could write into your policy, and the IRS allows you to write into your policy however you want to qualify that individual, is that Medicare accounts will not be qualified for presumptive eligibility for probate accounts, as they will be claimed on the Medicare bad debt cost report. It's a way to go about that. That would be my suggestion. Any other questions?
That was it for the questions.
Well, I want to thank everyone. I hope you can join us for our next webinar on 501R6 coming up shortly. Have a great day.